Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I got an exciting guest on the line with me today. He's a returning guest. We're going to talk about gold today and the markets. And gold has inched up over $1,300, and investors in the precious metals companies and the precious metals in general, this is of important concern. This is exciting, actually. Not many people are talking about this, and I want to spotlight this today. So I brought on the line with me today Patrick Donnelly, president of First Mining Finance, a company that's become the go-to name in the gold space. And I actually profiled FF last year at 37 cents, and it went up as high as $1.31. And the company has been on an aggressive mission, gobbling up ounces of gold in the ground for really pennies on the dollar. And last I checked, the company is trading for 63 cents, and really for no good reason, if you ask me. And we're going to get into that in the call today. Pat, thanks for coming on the show with me.
Good to talk to you again, Kenneth. Thanks for having me on.
Of course. A lot of people are saying that blockchain is stealing gold's thunder. We got the stock market hitting new highs, stealing gold's strength. A lot of people aren't paying attention. People don't even know that it hit 1,300. Maybe this is true to some degree, that there's some people aren't thinking about gold because of some of these other sectors that are taking off. But I want to talk to you today and remind people the importance of why we have gold in our portfolio and the cyclical nature of it.
Absolutely. Historically, gold has been seen as, a store of value. It's the oldest store of value. It's been time tested for, hundreds, if not thousands of years. All the ancient civilizations use gold as a store of value, and today it's still considered the best store of value in a very volatile global economy. And as you alluded to, right now we're seeing some very, very strange things in the global financial markets and specifically the global equity markets, where we're seeing historically high asset values globally and amongst various asset classes, and it's kind of got me a little bit worried that things have gotten way too frothy, and we're due for some correction. And historically, gold's been a way to protect your wealth, protect your value against uncertainty, and I think we're going to enter into something pretty soon.
Pat, to be fair, gold really hasn't performed that bad this year. And, since its bottom off of its low in December of 2015, we're up pretty decently. But the mining stocks seem to be lagging at the moment. And why don't you give us a little idea on where we are cyclically with the mining stocks? And should we see a snap back, or do you expect a snap back here in the near future?
Well, yeah, gold is it's performing not bad. It's at $1,300, and I think that's a good solid price. It's a price where all the gold producers are making money, and it's a price that I think people should be happy with. That being said, what's been really strange is that the gold equities, historically the gold equities tend to march lockstep with gold prices. We're not seeing that. The gold equities are still kind of languishing right now. Maybe it's because market participants don't think that gold is going to hang around $1,300. There's still an overhang from central banks that they're going to increase interest rates and also start selling off all these debt instruments that they were buying up many years ago, which should drive down the price of fixed income and therefore push up interest rates. But right now, like I said, against all the other asset classes out there are very, very frothy, and yet the only asset class right now that seems to be nicely valued is gold equities, and even though gold prices are looking not bad, and overall gold fundamentals I think are good, given I think, like I said before, we could be heading into some very severe headwinds in the global economy, given the frothiness of all these asset prices.
Yeah, certainly. And so let's talk about First Mining Finance here for a little bit, Pat.
Sure.
You guys have done something incredible. You had this bear market strategy of purchasing ounces in the ground, really for pennies on the dollar, and you guys went on an absolute tear, just buying acquisition after acquisition. And I mean, it was really something I had never been a part of before, certainly not as an investor. And it was quite the journey. So maybe just before we get into, some of the future plans or what some of the latest news, tell our audience how we got to where we are today.
Well, I have to give credit to our founder and chairman, Keith Neumeyer. When I met Keith in 2014, gold prices weren't doing that great, and gold equities were doing extremely poorly. There were thousands of junior mining companies that were in severe financial duress. And when I met Keith, he was convinced we were at the bottom of the market, and it was a great time to back up the truck and go out and acquire high quality yet highly distressed junior mining companies. And so we put this company together in early 2015. We raised $7.5 million Canadian, and we immediately, once we got listed on the TSX venture, we went on a buying spree, and we did 8 transactions in a period of just over a year, and added 12 assets to our portfolio. And now we have 25 assets in various jurisdictions at various stages, focusing on gold. And Keith is very, very bullish on gold. Another story I've been reading lately is I think we've hit peak gold production. There's been very, very few discoveries, if any discoveries, in the last 5-6 years or so. And yet the major mining companies globally have been depleting their resources, not replacing them. My background, I'm a geologist, and I worked for a lot of these major mining companies, and my job was to look for gold and other metals. And when things even get a little bit scary, they get rid of their exploration team. It's basically like firing your research and development team. And when you do that, then you're not discovering any more gold, and yet you're still mining gold from your reserves and resources. You gotta fill whatever's been depleted or mined out. You have to replace it. Companies haven't been doing that, and we're going to see a crunch. And I think the next 2 or 3 years, miners, they've already started getting aggressive, but they're going to get very, very aggressive the next couple of years to replace these resources. And I think that's really going to drive up the equity prices. People say that a strong gold price should be lifting all the gold equities, and in particular the juniors. But usually what gets the juniors going is the M&A activity, the merger and acquisition activity. And we're going to see that coming up very, very soon. And so I think right now, we're set. That's why we put this company together. We got 25 assets. We got some really high quality assets, and we're not going to put in production. Our goal is to advance them, de-risk them, engineering studies, permitting, infrastructure, that sort of thing. And when the majors or the producers want to do a deal, we'll do a deal at the right price, and we'll get 10 times for what we paid for it, and therefore create tremendous value for our shareholders. And like I said, I was in Colorado a month ago at the Beaver Creek Conference and the Denver Gold Show, and the mining companies are calling us. We're not calling them. They're sniffing around. They're kicking the tires, and at some point they're going to get more aggressive because they're just not replacing the resources, and it's going to be good for everybody.
Not that long ago, the company released a pretty exciting PEA, and the value of just the Spring Pole project alone is larger than the whole entire market cap of First Mining Finance. And it's been said, I think Keith Neumeyer actually said it, that Spring Pole could be one of the largest gold mines in North America. So for people who own First Mining Finance, who maybe are getting complacent or are worried about the stock or the value, worried about the future in general, just tell everyone how big of a deal this was and all the stuff that there's to look forward to.
Yeah, Spring Pole, that was an asset we were eyeing for a long time when we acquired it, and we liked it because it's big, and it's got 5 million ounces of gold. it's an indicated category, which means there's a very high confidence level in that resource. And statistical confidence is very, very high. And as you alluded to, we did an economic study on it last September, and then, the net present value was $800 million US. I mean, that's just off the charts. And in Canadian dollars, it'd be over $1 billion. And yet we're trading at, that's about 3 times the value. That's about 3 times what our current market capitalization is. So, we're currently, it's got a net present value of over $1 billion Canadian. We're around 340 million Canadian, or 275 million US. And then just Spring Pole in itself is worth almost 3 times as much as the company. And then you got Goldland, which has 600,000 ounces in measured indicated, 1.7 million ounces in inferred, and the market gives 0 value for that. And we've been drilling away there. We drilled about 20,000 meters, and the first stage of that, we drilled 100 holes and 87 holes at gold mineralization, and we're probably going to put out a new resource next year. Doesn't include Cameron. I mean, Cameron's got 1 million ounces, and it's got 2.5 grams, and the market gives no value for that. Hope Brook in Newfoundland, we bought that for about $11 million, and it has, again, about 900,000 ounces at about 5 grams. And then Pickle Crow, again, 1.5 million ounces at 4 grams. So, we're incredibly undervalued. I mean, you just like I said, if we didn't have all these other ounces, we just had Spring Pole, we'd be really, really undervalued. But right now is just absolutely ridiculous. So, and like I said, these are assets. They don't need $2,000 gold. They would make money in the current price environment. They'd make money at $1,200, $1,300 gold. We use $1,200 gold as our long-term price when we value these assets. And so again, we're getting calls. We're getting inquiries from the majors. We're not going to do anything yet, but it just shows that these assets are viable and there's interest in them, and we're going to unlock considerable value. And right now is just an incredible time for investors to find a story that's run by Keith Neumeyer, and it's highly undervalued. And again, we're in an environment right now where all the other asset classes are way overvalued, like real estate, healthcare, tech, everything is way overvalued. And this is the one sector that I think there's an opportunity to protect your wealth and get some upside.
Certainly. And one of the things that I've been telling my followers is, it's important to get on the train before the train leaves the station. And this is one of those moments where once it starts moving, it's so hard to jump on once we start seeing big price moves. And now it is that accumulation phase. So, Pat, I want to talk to you about one other topic, and that's just gold in general. I was reading an article that was talking about the history of gold and how it's literally in our DNA just to love it. And it's used in art, crowns for royalty, the hilts of swords. It was part of marriages and rituals for years and years and years. And the other thing is that I'm a saver. And there's something about owning gold for me that makes it just hard to sell, because I just want to accumulate it. It's just in me. And I guess just by way of closing out this interview here, what is it about gold that just people love and that gives it that underlying value that we can put our confidence in, or the confidence to store our wealth?
Yeah, I mean, I think you hit it right on the head. It's in our DNA. It's the Egyptians worship gold. They mined it and they considered it to have an incredible store of value. It was the ancient currency in ancient times, gold coins and gold jewelry. The Egyptians, the Greeks, the Incas, the Aztecs, all the world's civilizations were predicated on gold. The reason we had the Renaissance and in Europe was because the Spanish discovered gold in the Americas and started shipping gold back to Europe, and that created all this wealth and therefore investment in the arts, and we had the Renaissance, we had the Industrial Revolution, we had a great expansion in science and technology and mass production because of gold being discovered in the Americas and all this wealth being discovered. So that's what drove the economy. And now what we see is the global economy now predicated on a piece of paper, on fiat currency. And it's funny, I was visiting some family. I have family in New Jersey, and they asked me, what do you do for a living? I said, I run a gold company. And like, gold? What is gold used for? They had no clue. And my response is, well, what is the U.S. dollar used for? What is the U.S. dollar? What would you rather have? $100 in $100 bills or $100 of gold? At least the gold you can put your hands on is tangible. It can't be manipulated. You can't make gold. You can mine it, but you can't make it. What is fiat currency? Well, it's basically, a pledge by the U.S. government to pay you back. But if the U.S. government, not just the U.S. government, I shouldn't pick on just the U.S., the Canadian government, European governments, Chinese government, they're all, spending more than what they rake in by taxes. And so these fiat currencies, they're not tangible. You don't know, what is the true value of these fiat currencies, and I don't know. Whereas gold, you know what it is. It's physical. You can look at it. You can't make fake gold like you make fake currencies, right?
Right.
And so I think that's why it's simple. It's straightforward. When you see gold, you know what it is. Gold's very distinctive by its color and its luster and its weight and everything. So, so I think that's why human beings have always been drawn to gold, and like I said before, it's always been the key currency in the past, and I think going forward at some point, right now it's a store of value, but I think going forward, we're going to see it become a currency again, just like it was in the Roman times or the Phoenicians or the Egyptians or the Incas. It will become a currency again because eventually investors in the global economy will realize that fiat currency is not what it's purported to be. It's smoke and mirrors. The global economy cannot continue to crank out all this debt and not have a way to deal with it. And you see that, again, I don't like picking on the United States, but, U.S. government's got a tremendous amount of debt. It doesn't have it under control. And not even just the debt. Like, one thing I keep talking about, is unfunded pension liabilities. They're in the trillions of dollars in the U.S., in Illinois, in California, and other places. Eventually it'll come to a head. And so, where is the best place to protect your value, your wealth? Well, it's gold and gold equities. And First Mining, First Mining Finance, we have 25 assets. We're almost like an ETF because we're diversified by stage, by jurisdiction, and we're gold and we're liquid. It's a liquid, our stock is fairly liquid. So, and we're going to add value. We're going to advance these assets. So it's a great way for investors to have some exposure. I'm not saying they should have all their wealth in gold, but every investor should have a little bit of gold in there just to protect themselves, because again, we're going into uncharted waters again. And last two times we went into these uncharted waters, we saw global calamity in the global financial markets.
Sure. Yeah, no, and it takes a savvy investor and someone who's able to really overcome their emotions to understand the value that there is right now in the gold market, the precious metals market, and specifically in the underlying miners. So, Pat, thanks for coming on Crush the Street with me today. If people want to learn more about you or the company specifically, where would they go? And just by way of conclusion, what would they find?
Yeah, you can reach out to us. Our website is www.firstminingfinance.com. And all the information that you're looking for is there. And Derek Iwanaka is our VP of Investor Relations. His contact details are there. There's a presentation. There's a very nice website. It gives a very good overview of our assets and what we're doing, and also if shareholders want to reach out to us, just go to the website and all the contact information is there.
All right, Pat. Pat Donnelly, everyone, of First Mining Finance, president of First Mining Finance. Pat, thanks for coming on Crush the Street.
Thanks a lot, Kenneth. Good talking to you again.